Got to be a big day for you. I'm sure the phones are ringing off the hook about this one. I think really the question here is, does this mean anything more than these investors are interested in UNH? So we're going to get more into UNH in a second. But do you think this might be a sign that the healthcare trade is bottoming? I'm looking. Healthcare is the lagging sector this year, still down about 3%.
Yeah, I think that's a great point. We hosted a team call on Monday, and one of the interesting stats from one of our guys was that Nvidia is about 7.5% of the S&P, and healthcare is only 8.5% altogether. And so I think investors have really focused on tech and have just shifted away from healthcare. So a couple of things. One, we feel like looking at healthcare, we're at a real inflection point here. It's been a really difficult, not just 1 year, but multiple years, especially in the sector of managed care. And as we think about companies like United Healthcare, we believe that they have the assets, the collection of assets needed to move forward in a world of value-based care. And so, when we look at this and we look at these buyers buying this, many that you talked about are usually multi-year holders, not 6-month holders. So they're not just buying it for the bounce, but rather believing in the longer-term fundamentals. And that's the way we're looking at the stock.
Okay, so you're looking at it as a buy on the long-term fundamentals. By the way, just for some context, shares UnitedHealth, even after this huge pop, they're still down more than 45% year to date. So we're talking about Appaloosa, we're talking about Berkshire, Michael Burry, who was previously shorting the stock, now he's buying into the stock.
Yeah.
So do you think they're just seeing a bottom here for UNH specifically that's going to go up, or do you think there's potential for some activist intervention? And if so, what could they do? What steps could they call for to improve this company?
Yeah, my guess is that they just see an opportunity for the turnaround here. You've brought back the former CEO, Steve Helmsley, who was incredibly well regarded. He put together the collection of assets that ultimately became Optum. You have Optum Health, Optum Insight, Optum RX. And so I think that, again, I haven't talked to any of these shareholders, so I'm not exactly sure what their investment thesis is. But if I had to guess, it's more of, look, we think that this is bottoming. In order for healthcare services to work, we've said this multiple times, we think companies like United Healthcare, who historically has been the bellwether, really needs to work. And so healthcare is incredibly important when you think about, these companies really driving savings at the end of the day. And so, again, I think that the call here is probably more fundamental than just a bounce on the current valuation.
All right, so you mentioned some of these big name investors, again, Berkshire, Appaloosa, Michael Burry. They're more than likely longer term investors. This company, like a lot of other healthcare stocks, has been impacted by some changes at the federal government. How do you see those changes impacting the company going forward? And what's your price target for this company? Does it change with the idea that these companies are buying in? Is that meaningful to how you view the actual stock?
Yeah, so let's start with CMS and the changes that are going on there. The first thing I would highlight is that for 2026 for Medicare Advantage, we've had a price increase from a rate perspective, and we did not have that for the last 2 years under the Biden administration. So that's a positive going into 2026. Second, as we think about some of the programs that they're focused on from a CMS perspective, we think companies like United Healthcare will do well in the longer term as they're focused on value-based care. So, again, we don't see anything coming out of CMS that is overly concerning to us. We believe that the companies have the opportunity to price for the current utilization trends that we're seeing. And that's really where the issue has been in utilization trends and this mismatch between premiums and utilization. And so, the great part about insurance is that you have that opportunity to reprice. The unfortunate part is that, many times you're repricing in June and you don't see exactly what happened in that year until the fall. And so now I think companies like United have talked about the fact that they have priced for 2026 based on what they've seen, which has been a very high utilization trend in the last 18 months. I'm sorry, remind me of your second question. Oh, our
Well,
price target, right? So our price target is $310. So obviously, one of the things, and I would just point to a company like Humana, you generally don't pay trough multiple on trough earnings. And we quite honestly thought it was going to take a little bit of time for United to come back and start to regain its multiple. So, we'll have to take a second look at where it's trading, et cetera. Historically, this company has traded much closer
okay.
to a market multiple and even a premium to the market. And as you know, the S&P is trading at, just about 21 times. So, there probably is room from a multiple perspective here.